Everybody, thanks so much for joining us today. I'm going to give it just a few minutes for people to come on and going to give you just a little bit of an overview of what we're going to talk about today, since there is so much that's kind of happened in the last week or so when it comes to the mortgage forbearance and real estate market and everything. For those of you, though, that don't know me, my name is Jennifer Green. I usually go by Jen. But we have a business here in the Twin Cities metro. It's called Property House Partners. We help folks out of sticky real estate situations, more or less. Those folks that need to sell their homes quickly or are not interested in doing a traditional sale on the real estate market. We work with you to come up with a plan that is going to work for you. We always give 3 offers. You get to choose which works best for you. And we make that transition of real estate as easy as possible. So what I'm looking to do today is really talk about, there was an article that was just posted by a colleague of mine, Ron Orr, on what's happening with folks' stimulus checks that are coming from the government. I'm going to give you an update on that because I think that really applies to here. And then I'm also going to talk about how the applications are going for mortgage forbearances. Then I'm going to be talking about what a forbearance means versus what a deferment means, because I think there's a lot of confusion around that as well. And then also how the payback works if you do elect to have a deferment or a forbearance. And then I'm going to also start really just talk about the real estate market and what's going on, not only in Minnesota and the Midwest, but around the country and in some aspects around the globe. So I'm going to start off, though. I wanted to ask you folks a poll and see if there are folks here that have applied for a mortgage forbearance. I know I did that on my my story before I started, and I've got about 50% of folks that were saying they have and 50% of folks that said they haven't. So I'm hoping that you're able to see that. That's my first time doing one of these polls. And so if you could answer on that, that would be really great to let me know where folks are at right now. I am going to start off with talking about the stimulus checks, and the article that I just recently read is telling me that some folks' stimulus checks are being seized actually by private lenders, meaning like payday loans or anything that's not supported by the government. And like you can't take away for taxes and different things like that. But more or less, those private debtors, debt collectors, are swooping in and taking those stimulus checks. And the reason they knew this was because one gentleman more or less had his stimulus check taken from his bank account and he was going to use that. And so more or less in the form of a garnishment, that was something that was seen as an oversight in the bill when it was originally written for the CARES Act. And so it's a first wave oversight. And what they're saying is if you have any other outstanding debts from a private debt collector, that once you get your stimulus check, they're saying take it out immediately and put it into another account or keep it as cash. Because there are some attorneys general that have put in for an injunction on this. I know New York put it in, and I think another East Coast state has. But just know that in America, in the CARES Act, those stimulus checks that are coming back, if you have other debts, please make sure that you guard that, because this first round of checks, there are some folks that have unfortunately had those checks taken away from them. So do know that. The second thing I want to talk about is what's going on with the forbearances. And so I have some stats that came in from US Bank, which is, a really big lender here in the States. And what I'm seeing here as of right now, over this last, as of the last couple of days, they have had over 81,000 forbearance applications. And about half of them, 40,000 of them, have not been processed yet. That's crazy. The other thing is Mr. Cooper, which is a servicing company, like kind of that middleman piece of it. They have about 86,000 applications that have come in. The Small Business Association from US Bank, they've received 42,000 applications. Listen again, 42,000 applications for the Small Business Association, the PPP or the EIDL loan. And they've had 62 people or 62 businesses approved. So 62 approved out of 42,000 applications. That's alarming to me. So do think about what that means. And that's, like I said, obviously one of the big banks. I think everybody heard already that Wells Fargo is tapped out in terms of what they have to give out for, small banks and the PPP and those types of things. So just please be aware, always call your bank, ask and see where things are at, stay on top of your applications, because if you don't do it yourself, they're not going to do it for you because they're completely overwhelmed by the amount of applications that are coming in. I mean, just last week, there's about 16 million people that have applied for unemployment, which is crazy. So, but totally and completely understood based obviously upon, what's going on with the coronavirus. So, I mean, we expect that number to keep going, furloughed, laid off, unemployment, whatever it is. So, the mortgage bailout requests also too are about up 78% in 1 week. So last week, as of April, or the week of April 5th, it was up 78%. And the number of borrowers that are in forbearance right now is about 2 million. And that rose from 2.73%. It's now up to 3.74% of the total. So this is also from banks and then non-bank servicing portfolio. So meaning like those Mr. Coopers or the middle road. The other part is that Ginnie Mae, which I want to explain that to folks, that's like those government-backed loans. So you've got of more of the lower income first-time home buyers, FHA, VA, those are called Ginnie Mae. Those are also in forbearance, and those actually are the ones that are highest right now. That number that was the largest growth, which unfortunately does make sense. Those are at about 5.89%. So, I mean, just think about what that means. I mean, and that's in, a month or so. And again, the thing that's so hard about all of this is that nobody knows where, when this is going to end, when things are going to pick back up, if it's going, the economy is going to open again. Folks are really struggling. And so these are all things that are obviously meant to be put in place to help us out, but it's not really working very well. Obviously, you heard those numbers in the beginning with how many folks have applied and how many have actually been approved, when it comes to the forbearances and then when it comes to the SBA loans. So I do want to talk about what a forbearance is versus what a deferment is. And the reason I say this is because I've seen a lot of people say, oh, I'm able to forbear my loan, and they're just tacking it on at the end. That is not a forbearance, that is a deferment. And so the difference between what that is a forbearance is that you don't qualify for a deferment. All right. That's kind of the first level that they go to is a deferment. And I'll talk about what that is too. But really what a forbearance should be a last resort for folks. And I have a lot of these articles and some of this information that I've got. It's all going to be, it's on our website. It's posted there already. www.propertyhousepartners.com, and house is spelled Haus. All of this information is there, most up-to-date, accurate information. It's in our video, or excuse me, in our on our blog, and then also all of these live videos are also in our video library. So you can always take a look at those too if you're not, able to see this one, or if you want to go back and take a look at it. So to get back to what I was saying, my apologies for that interruption, but it just made me think of that, and I wanted to mention it. Is that the forbearance does it can affect your credit. Okay, so a lot of the times, and that's usually if it is not a federally backed loan. So Fannie, Freddie, or Ginnie. Those three will not affect your credit. But if you do have a private loan, the forbearance may affect your credit. So think about that too in the long run. That could mean if you're trying to apply for, a home loan or an automobile loan, that can affect your credit score, and you perhaps may not get the best interest rate because a lot of the times a forbearance can resemble that you have not paid. So do keep that in mind. What a deferment is that is stopping your payments, let's say, for example, for 90 days, because that's typically what the stop is right now is 90 days. And then what they're doing, that adds time then to the end of your loan. So that's backed on the end of the loan. So you don't pay those 3 months, but then your loan can be extended. Your, interest rate they can mess with that too. They can extend it for a longer amount of time, but know that it's going to be tacked onto the end of your loan. So Mr. Cooper, like I said in the beginning, they had 86,000 applications there. they're expecting people to pay all of those months up front afterwards. So if you skipped, 3 months, let's say your mortgage payment is $2,000 and you miss, you forbear 3 months, $6,000 on that fourth month, that lump sum is going to be expected to be paid all at once. So $8,000, which I had said in a previous live, it seems counterintuitive, which it is, because if you don't have $2,000 to pay right now, what makes you think that you're going to have $8,000 in 4 months from now? But that's the situation that we're in right now. So I want to keep folks just in the know about that. The other thing is that if you have taxes that are included in your mortgage payment, and you apply for a forbearance, those will be put on the forbearance. However, if you have HOA fees, if you have taxes or anything else that you pay outside of your mortgage, you still have to pay those because you could go in default. And HOAs, homeowners associations, at least by us in Minnesota, those take first position when it comes to liens and they can issue a foreclosure. So please be careful of that. What the mortgage companies are doing right now, though, in terms of, paying, they're number one, like I said, if you do the forbearance, they're doing one lump sum. There's also a possibility to negotiate to make extra payments, meaning that you'll, pay an extra amount each month that'll be tacked onto it until the deferment is repaid. It's typically lasting about 2 to 6 months. So then you'll add, a certain amount on top of that mortgage. Or now, like I said, they're adding the suspended payments to the end of the loan, which is then part of that deferment. Or you can apply for a loan modification. Now, that does involve a lot of paperwork. You have to provide proof of income. You have to provide taxes. You have to provide your W-2s. There's a hardship. There's bank statements. There's a lot of paperwork that goes into that. Hardship letters. It's more or less a hardship package that you're producing for the bank in order to qualify for that loan modification. Now, loan modifications, though, are notorious for not being approved. 90% typically of loan modifications are not approved. However, of those 10% that are approved, 96% of those folks end up in foreclosure anyway. So just think about the path that you choose based upon what's available right now. All right. I know a lot of people are saying, oh, I'm just going to forbear. I need to do that. If you are able to pay, please keep paying. This should be a last resort for you because, like I said, there's been so much information out there of folks that have been said like, oh yeah, I'll just add it on to the end of the loan. And that's not the option when it comes to a forbearance. You're going to be expected in more cases than not to pay the entire amount after the forbearance is over. I would ask your bank also, is this a deferment or is this a forbearance? And then also ask if fees, penalties, and interest are going to accrue on top of the numbers that you're required to pay. Those are really good questions to answer, ask your banks. Excuse me. The other thing I would say is that I know that banks have gotten better now. There's been reports that have come out that the banks are better now actually about answering folks' questions and getting to them in more of a timely manner, whereas the waits were 7 or 8 hours before. The average wait now is about 13 to 17 minutes or so. Again, it's going to depend on what kind of bank that you have, but do know that those numbers, like I said, are going down in terms of wait times. So I want to make sure that, all of this is very clear, that you folks, please ask your bank when you are applying if it's going to be for a forbearance or if it's going to be for a forbearance or if it's going to be for a deferment. Okay. So the other thing I wanted to talk about now is what the buy side looks like. So there is some good news on the buy side. All right. And I would like to put another poll out there and see if people are still looking right now for homes on the market. And it doesn't matter where you are, if you're in the States, if you're in Europe, if you're, South Africa, Australia, New Zealand, wherever you are you still actively looking for homes right now? By us in Minnesota, real estate has been deemed an essential business. So I know there are still folks going on home visits. There's been a lot of virtual tours that have been happening. We've been doing that ourselves with some homeowners that they want to meet with us to sell their homes, but they're not comfortable with us coming in. We've done virtual tours. I've done lots of Zooms. I'm kind of sick of Zoom, but I'm thankful for Zoom because it's really been able to help us keep our business going and being able to help folks out in these situations that are still looking to sell. But I will say the mortgage rates on the buy side right now for folks that are still able to borrow are still pretty good and continue to drop. The 30-year fixed rate now is at about 3.33%. And it's proving that it's probably going to drop even further, averaging out at about 3.3 for 2020. And then it's looking at like about 3.1% for 2021. So if you are looking to purchase right now, it is still a good time and you're able to qualify for a loan. This is still a really good time, to purchase properties. So that's really good news on that side. So I wanted to talk a little bit about what the real estate market now is looking like, because I've heard lots of different things. I was just on a call previous to this, and I've been doing a lot of looking and seeing around, the nation and around my area of what's happening in terms of the property market. And by us in Minnesota, what I've seen is there's still people looking to purchase. There's actually a lot less, houses on the market right now just for selling purposes because people don't want other folks in their houses. Like I said earlier, there has been a shortage on that side, and those houses that are typically selling, if they're vacant, those have been selling a lot quicker. I'm going to post another poll for you guys to see if there's anybody actively right now looking for homes right now too. And I'm seeing from my other poll that there are some people that are still willing to go to an in-person home tour right now. So that's kind of neat. And if not, like I said, there's the opportunities to do virtual tours. There's folks like me that are doing virtual tours. There's also, a lot of real estate agents that are able to do virtual tours. So I would ask around for that stuff. But in terms of I know Chicago, one of my mentors, JT Fox, had said the Chicago market is pretty much at a standstill. I know New York is kind of decimated sort of at this point. San Francisco, LA, West Coast market is pretty quiet. And then I have friends, in Wisconsin where they're saying it's a total seller's market right now. People are going on a buying frenzy. Some houses are selling, $20,000 over asking price. And so it's kind of been, it's sort of all over the board, I've heard that we're back to 2008 and that, there's a lot of different creative, real estate solutions that people are having to come up with to get folks out of situations of folks who are looking to buy or looking to sell. There's so many different things that can be done in this market. And, just because things have been shut down and folks are still needing help doesn't mean that we can't still help and create opportunity in that way. And so, I know renters too have obviously stopped paying. There's been some renter strikes. A lot of those folks that have heavily invested and over leveraged themselves in the investment market in terms of commercial, mixed use, and multifamilies are really struggling right now because more or less they over leveraged, put their money in, refied out, bought another property, refied out, bought another property. Those are the folks that I'm seeing right now. They're really struggling, unfortunately. I know in Canada, that market too is seeing their first drop in years. They actually were not really affected by 2008. And I'm actually really looking forward to my Thursday conversation. I'm going to be having a discussion and interviewing Jonathan Wright. He is a colleague of mine that works out of Nova Scotia and does real estate investing out there too. And he said things have been, crazy busy for them too. They put, 4 houses under contract in the last week or so. And so there is opportunity. There are folks that are still looking to sell. There are still folks that are looking to buy. It just depends on how you find that. I mean, I've had folks still, like I said, calling us too, saying, I really still need to sell right now, or, I inherited this home and I really don't want to go through the mess of, fixing it and finding somebody to sell it for me. Like I said, that stuff is still out there. There's still opportunity. And so I want to make sure that, when we focus on the real estate market, that folks that are looking to still sell traditionally, it's still a market there for you. You just have to determine whether or not you're comfortable with having other folks in your home. And if not, like I said, make sure if you have it on the traditional market that you're having an agent that can do virtual tours for you and set it up that way. And then also those people that are looking to buy, same thing for you. Are you comfortable going into homes? Are you comfortable buying online and you're doing a virtual tour that way? Could you have someone go through the house for you? I mean, whatever it is, you have to set it up in a way that you're comfortable to make it happen for you if this is something, that you need. Because like I said, there is still now even more of a shortage in terms of homes that are available. I mean, the last MINREA, which is Minnesota Real Estate Investors Association, that I went to, I mean, the housing market, there wasn't very much available. Typically, it's what we were seeing is that, if every single house sold every single house sold, we'd only have inventory for about a month and a half, which is not very long. And so thinking about that, if you're looking to sell and you feel comfortable, now is the time to do it. If you're not feeling comfortable and you're able to stay in your house, then do it, because again, nobody really knows when this is going to end. So I want to just talk a little bit about what we're going to be doing Thursday. Like I said, I'm going to be speaking with Jonathan Wright, like I said, a colleague of mine out of Canada. He does, deals in the US and Canada and different places. Same thing with me. I'm all over the States as well, investing in different areas of the States. And I think it's really going to be important for us to talk about, folks that are in the business that we're in of helping people, get out of sticky situations. Because unfortunately, with this confusion, when it comes to the mortgage forbearance, I'm afraid for what's maybe to come for these folks if they aren't necessarily understanding or do not get the forbearance or don't understand what it is. That's why I've been really, on top of putting this information and content out there for you folks, because there's so much confusion. There's so much new information coming out every day. Same thing, with the Stimulus Act, with the CARES Act, in terms of the SBA loans and PPP and EIDL loans and all of that. There's so much information. And I think so much has been pushed out to try and help, but there's sometimes not any afterthought of how that's, going to work. And so please always be sure to contact your mortgage company. And like I said, I know that the wait times are less than they were before, which is great, but make sure you're asking those questions. What does it mean for me to forbear? Is this a forbearance or is this a deferment? Is there going to be any kind of penalties? And what does my payoff look like? Is it going to be a lump sum? Is it going to be added on in the end? Can I work out a payment plan? Is it going to be a loan modification? What if I need an extension, to my 3 months because I'm still not hired back at my work? What does that look like? These are all questions for you to ask your mortgage holder. And so I'm done for now, but I hope that this was helpful for you folks. Please tune in on Thursday at 2:00, same time, same place. I'm going to be doing a Zoom again with Jonathan because he's obviously in Nova Scotia. But if you have any questions or want to contact us just to even talk, learn about what we can do to help, or just even talk about what the mortgage forbearance means for you or deferment, or have any questions about that, I'm definitely not an expert on that. I'm only, providing the information that I know too. But like I said, we stay up to date on this stuff and provide the most up-to-date information for you, and that's available. So please reach out to us. You can send me an instant message if you want to, a direct message. I'm on Facebook. I am on Alignable. I am on LinkedIn, and I'm also on Instagram. Those are 4 different ways to reach out to me. You can also send an email to our general business, which is hello@propertyhouseinvestments.com. And again, house is spelled Haus. You can always take a look on our website, www.propertyhousepartners.com. There's a bunch of information on there, always up to date on what's happening in the real estate market and also what's happening with mortgage forbearances. And then also there's a video blog there, or video library of all of the lives that we've done and all of the interviews that I've done. So if you want to go back and get some of that information, please feel free to do that. We are here to help in any way that we can. Again, we help folks out of any kind of sticky real estate situation that they may be in, or even if they're not in a sticky situation and just want to sell off market and don't want to necessarily, list online and, keep their houses clean every day or whatever it is, or have folks in their homes. We're here to help in any way that we can. So thank you for joining us. I look forward to seeing you guys on Thursday. And like I said, if you have any questions or want to reach out, please feel free to reach out to me. And you can email us or give us a call too. Our direct number into our office is 612-234-2476 for those of you folks that are calling in from the States. Look forward to seeing you on Thursday at 2:00. Thanks so much, guys. Have a good one.